If you hold crypto, then the information in this video will not only shock you, but have you wishing you accumulated more of that crypto and XRP. Larry Fink, the CEO behind the world's largest fund manager, BlackRock, sits on a whopping $10.5 trillion of assets under management and has never been more bullish on crypto and asset tokenization. And we believe over the next decade, BlackRock and Larry Fink will have some serious skin in the game that could amount to at least $1 trillion of a bet in crypto markets, with many of those flows not only hitting Bitcoin, Ethereum, and Solana, but also XRP. So in this video, I'll be covering the BlackRock Bitcoin Spot ETF inflows and what that will mean for crypto markets, BlackRock's big bet on the future of asset tokenization, and how this will create major demand from virtually all institutional players for the major market cap cryptos and blockchain technology. I'll even be covering how Ripple and XRP will capture much of that value over the next decade. So if you're feeling blessed and bullish, comment 777, and if you're going to be the richest person in your family tree, smash the subscribe button. So since 1999, BlackRock is up a whopping 6,000%, and that's arguably because they've been doing a pretty dang good job at managing other people's money. Now we're talking pensions, retirements, 401ks, so on and so forth. Right now in 2024, they are currently sitting on the largest sum of money out of any other fund manager in the world, $10.5 trillion, and that is according to Statista. Now, aside from the original Satoshi wallet with 1 million Bitcoin in that wallet, the largest holder is BlackRock with their iShares Bitcoin Trust ETF, and that is a spot ETF, which means they actually have to buy and be a custodian to all of the Bitcoin that they do buy. Okay, they're sitting currently on the largest sum of 357,000 Bitcoin, or $21.1 billion. But that is a very small sum for the period of time, being that it is the fastest growing ETF in BlackRock's history. Needless to say, Larry Fink is a large believer, and here's what he had to say in January about Bitcoin.
But I'm a believer in it because I do believe it is an alternative source for wealth holding. I don't believe it's ever going to be a currency. I believe it's an asset class.
You don't believe it ever becomes a currency?
No, I think we're going to create digital currencies. We're going to use the technology for it. We're going to use the blockchain.
How important is that, though, to then the long-term value proposition
of Bitcoin?
Of Bitcoin. If it's not something that ultimately becomes a currency, if it's simply, we'll call it digital gold, it's an asset of some sort, what does that mean?
It means,
in terms of price,
I believe, I believe it goes up if the world is more frightened, if people have fearful of geopolitical risk, they're fearful of their own risk. It's no different than what gold represented over thousands of years. It is a asset class that protects you.
Right.
And unlike gold, where we manufacture new gold, we're almost at the ceiling of the amount of Bitcoin that'd be created.
When you hear somebody.
Now, when Larry Fink is talking about that, I do believe he has access to more data and money than just about anyone else aside from the Fed. And they run a product called Aladdin, which is Asset Liability and Debt Derivative Investment Network, which is basically an AI product that has handled about $11 trillion in assets, which is about 7% of the world's financial assets, and they've kept track of about 30,000 investment portfolios. Then just this last 4 years ago, they managed $21.6 trillion in assets, and that has only climbed since then. So Aladdin has had access to a lot of data. They probably measure a lot of metrics. They're taking in all of this into consideration, and then they're saying, let's go to where the puck is going to be in the future. And we are seeing that the future looks like asset tokenization. And and arguably regulated digital assets or products. So it's important that people like Larry Fink have their pulse on the market, right? And as we watch what he's doing, it's giving us hints and clues about where the future is going in terms of asset tokenization, crypto markets, regulated products, and here he is talking about a tokenization platform.
Important to be anticipating the next move. We believe the next step going forward will be the tokenization of financial assets. And that means every stock, every bond will have its own, basically, CUSIP. It'll be on one general ledger. Every investor, you and I, will have our own number, our own identification. We could rid ourselves of all issues around illicit activities about bonds and stocks and digital by having a tokenization. But the most importantly thing, we can customize strategies through tokenization that fits every individual. We would have instantaneous settlement. Think about all the costs of settling bonds and stocks. But if you had a tokenization, everything would be immediate because it's just a line item. And so we believe this is a technological transformation for financial assets. I believe if you want to talk about voting and voting choice and all the things, if we know every moment who is the owner of that stock and it's now time to vote, every individual who has ownership is identified and they can vote their own share.
And so yes, this is massive news for XRP, the crypto market as a whole, and ETPs, as Citadel Securities and BlackRock back the Texas Stock Exchange in a challenge to the NYSE and the NASDAQ, which are the two largest US-based exchanges. In this, the Dallas headquartered bourse, which has raised about $120 million, plans to file registration documents with the Securities and Exchange Commission to start operating as a national securities exchange later this year. The TXSE said on Wednesday. TXSE aims to attract listings of exchange-traded products, and they're going to do this in the form of asset tokenization. So yes, Larry Fink and BlackRock, and using their Aladdin software, have decided that they are going to be pouring a lot of effort and energy into the future of blockchain technology, crypto, and regulated crypto products. Which is why we're so bullish on companies like DeFi Tech, because they are bridging TradFi with innovative exposure to digital assets. In other words, they're bringing crypto products to the traditional financial world through their institutional grade ETPs. An ETP is an exchange traded product. We just heard about how the NXSE is going to be offering those, and arguably companies like DeFi Tech are offering these ETPs to institutional investors and retail investors alike in a regulated manner. That is not the only thing that they offer. They offer trading, strategic ventures, and Web3 infrastructure. So if a company came along and said, I want to use Web3 technology or blockchain to make my company more efficient, well, guess who they could use? DeFi Tech. Now, DeFi Tech is the parent company to Valor, okay? And so Valor basically offers access to these digital assets, and they offer Bitcoin, Ethereum, and a bunch of other ETPs. Now, whether you want single-sided digital assets through Valor, okay, in terms of maybe you want Chainlink, or maybe you want BNB, or maybe you want Engine, or even XRP, you can also get access to a basket of these cryptos in the form of one of their diversified indexes. And so the case of, like, for example, Valor Digital Asset Basket 10 SEK, or just the 10, right? You're getting access to 10 different cryptos in the form of a single ETP. Now, this is huge because it not only allows a bunch of institutional players to get access to regulated crypto products, but it's also a very simple way for them to do it without having to worry about going directly into the world of DeFi and to worry about taxes. Because ultimately, as people like BlackRock, or, you know, people like Larry Fink with BlackRock continue to build out this asset tokenization future and the future of crypto, okay, institutions are going to want more access. And so here's the thing. Institutions are unable to hold digital assets directly unless, of course, they get access to ETPs. And so this is one of the first major companies really making some plays in the space. And what's so cool is you can get these securitized products traded on a regulated stock exchange, accessible via a bank or a broker. And because the demand is so high from institutional investors for digital assets, this company has been growing. Here is a little excerpt from the earnings call in Q1, and Q2 just got better. But here's Russell Starr, head of the capital markets, explaining where they're at as a company.
Profit. I think everybody needs to look at the company as a whole. So we basically did 10 million US in revenue in Q1. Q2, the math is really easy, and I'm using US numbers here, but our AUM is basically 50% higher in Q2. So multiply 10 million US in Q1, which is, basically break even for the year just in Q1. So you have 15 million US, call it, in profits for Q2, and you have 40 million in profits off of the trade. So we're already at a 55 million profit run rate in the first 6 months. 55 million should be trading at 20 times profits, because we're not even talking revenues, we're talking profits. That's a $1 billion AUM company. And if you look at our US market, that's a 4-bagger from our current share price. So there is a massive valuation disconnect here, which we're obviously going to be working on aggressively to change. There are broker dealers all over in Canada and the US that are reaching out to us now that they're seeing what this company is doing.
Now, in this post from Eric Jackson, who is a fund manager himself, talks about how this is the next Carvana. And he explains that additionally on their earnings call, they stated that their operating costs, including debt servicing, which has been reduced by 25 million in the last month, is about 10 million a year. This suggests they now have an annual earnings of $132 million a year, which is much higher than the Bloomberg consensus or their recent historical financials. In other words, if the price of Bitcoin increases at the end of the year to $150,000 from $67,000 today, now this was just a short while ago, and at the end of the day, even if it hit $150,000 maybe next year, maybe not this year, if you believe Bitcoin is going to go up in value over the course of the next couple of years, then this might be a legitimate play for you. You would have an earnings of 209 million, implying at the end an end of the year stock price for DeFi, which is their stock, and we're going to look at here shortly, which kind of is a basket in the form of this product, would be around $32 a share. However, the bottom line is that there is a reasonable scenario if you think BTC doubles in value over the rest of the year, that DeFi could trade close to $50 a share by the end of 2024, and I would argue maybe even 2025. Now, when that post was actually written, the price was at about $1.60. Currently, we're sitting at about $2.21, and the trend has consistently been up since its lows back in August of 2023. This stock has truly been performing, and what's crazy is it's extremely undervalued according to all metrics. And in the recent post we just discussed, he's talking about how with a 39 times forward multiple, okay, currently we're suggesting that the stock is very undervalued at about a 1/13 of its fair market value. In other words, not only is this thing undervalued, but it's performing extremely strongly, okay, while the rest of the market continues to experience that summer lull, which is a true indicator that institutional players have started to pick the stock up. They are viewing it as an asset that they would like to hold for the long run, and our current all-time highs at about $3.51. We are currently breaking right into this range at $2.20. Our recent high was $2.44. If we break above this range, highly likely we were going to that previous all-time high at about $3.51, even though I can barely get the line there. And if we break out above that, I mean, sky is the limit. I think this thing will see a fair valuation in the near future. But truly, when you even compare this chart to, versus the chart of Bitcoin, which is indicated by this green line, we are currently tremendously outperforming Bitcoin. Bitcoin is currently sitting at about a 251% gain from its lows back in January of 2023, whereas this stock stock is up 2,000% and still tremendously undervalued. And I would argue it's because when you buy a stock like this, you're getting access to their entire business. And their business is offering crypto and digital assets to the financial world, the institutional players, okay, in a regulated manner. So when you get a minute, go ahead and go over to defi.tech, defi.tech, if you want to learn more and if you want to get access to any of those ETPs. So yes, regulated and tokenized products are going to be the future, and BlackRock continues to buy. In this post from Arkham Intel, you can see that Fidelity sold, Bitwise sold, ARK sold, Invesco sold, VanEck sold, but BlackRock bought $200 million of Bitcoin just this week. What's even more wild is that the data is proving that they're only accumulating with a few down days. Okay, right now the date is August 27th, or the last time this was updated, I should say. The current balance over at BlackRock's iShares, iBit, Bitcoin Trust, sitting at 357,000 Bitcoin, and that's going to continue to grow if we just look at the trend. But you can see right here, consistently they're adding Bitcoin to their reserves. We've only had 1 day, 2 days, 3 days, 4, 5 days total since January 11th, when they added their very first Bitcoin at $46,000, where they have actually got rid of Bitcoin. But generally speaking, the trend and momentum is to the upside. And maybe it's because they're seeing what you and I are seeing, that crypto truly is the future, and arguably Bitcoin is a better store of value than just about anything else. Here is the chart of gold versus Bitcoin since its inception. It's about the exact same chart on the dollar. It's almost the same chart on the SPY or the S&P 500. It's almost the same chart when you trade it versus Apple, or even the best performing stock in history, Monster Beverage. The only one it's gained on just slightly is Nvidia, where Nvidia is up since its bottom in 2021 a bit, but generally speaking, Nvidia is still down relative to Bitcoin. So with trends like these, it's hard to ignore, or at least not to get excited about the future, as someone like Larry Fink is basically stating that tokenization of securities will be the next generation in markets. And that means you are taking these asset classes, virtually all of them, and putting them on the blockchain. And companies like Ripple are now in the fold, sharing their technology to help companies scale using tokenization. As you can see here, it's estimated to be a $20 trillion industry by 2030, according to Boston Consulting Group and Citi, which has the ability to impact the price of XRP and really create a strong revenue stream for a company like Ripple. Then when you combine that with the fact that now we have an Ethereum spot ETF, it only legitimizes crypto more as Bitcoin becomes more adopted. Okay, then you start to get things like Solana, which there's a prediction from the Motley Fool that it will be the first cryptocurrency to get a spot ETF in 2025. And when you look at the top 10 cryptos, the next major player on this list to get a spot ETF after Solana, okay, would be XRP, seeing that they already have regulatory clarity around the fact that they are considered not a security. So even if Solana potentially didn't get that spot ETF, XRP is definitely next in the running, because Binance Smart Chain, or in this case BNB, I should say, the token, is backed by that exchange, which is no longer regulated or in the United States. And to make things even more legitimate, the CME Group back in July added 2 new real-time indices, okay, and those were Ripple, XRP, and then ICP, or Internet Computer. And they are basically adding the daily benchmarks over at the CME Group, which trades and transacts in trillions and trillions of dollars yearly. Now, this is huge because it legitimizes XRP as a real digital asset, a real product. It starts to get more eyeballs and attentions towards XRP as an asset, and arguably that's going to bring more dollars and more money flows, which is going to pump the price of XRP alongside the other 2 major bullish pieces of news that we just explained. So there are a lot of bullish factors that come into play through the end of 2024 into 2025. And yes, this whole summer lull isn't new, as explained right here on this post. Back in 2023, things looked very similar. People were relatively bearish. Okay, then we had this fractal type deal where then finally when we did break out above the range highs right here, things really started to cook. We're starting to see the exact same thing on Bitcoin. And when you look at something like XRP, yes, the range, and it has been boring, to beat still is going to be about 73 to 75 cents. As things stand, we've seen a lot of volatility, okay, with a breakdown down to 38 cents, a range high of 65 cents, a major move in a V-shaped recovery. Currently, we're sitting at the 55 EMA, just above that 200 EMA. So if we break down below the 200 EMA, I would say that it's likely we're going to break down back to 43 cents or maybe even 48 cents. In these ranges would not be a bad time to accumulate for a move back up to the upside, maybe 62 to 65 cents. Okay, that said, the range to beat through the year is going to be 73 cents, and I do believe that will happen as the entire crypto market begins to recover. But maybe that's potentially into a new incoming presidential administration. Maybe that's due to factors when it comes to ETFs. Maybe it's a combination of all of these really positive events. We don't know, but here's what we do know. Things are starting to look really good for XRP as it continues to build this range support. And so, yes, we are in a very long, boring time, but at the end of the day, the longer the range, the stronger the breakout. So it pays not only to be patient, but to be paying attention during the boring times and accumulating. So if you enjoyed the video and you haven't already, head on down to the description below, grab that link for bullrunners.com to discover how to earn more crypto in less than 10 minutes with the #1 play to earn XRP game. So the reality is, if you already hold XRP or you plan to buy more XRP and then sit on it, the best thing you can do is put it to work to actually earn crypto, which, yes, is convertible for XRP. So imagine this. It's kind of like if the market dumps a little bit, okay, because of some really weird circumstances or a black swan or whatever, this is going to reduce your volatility because it's like you're averaging into the market lower. Okay, you're putting that XRP to work, you're earning on it. On the flip side, if the market starts to become really bullish and things start to turn up quite a bit, then you just were compounding on that bag, okay, which helps you to earn more either way. So you have nothing to lose and everything to gain by at least going to the other side and checking that link out. Yes, you can earn that crypto and convert it for XRP at any time you want. Pretty straightforward. You do it in 3 simple steps. But once you subscribe, you'll see exactly what I mean, and you can watch the video on the other side to see how it works. So thanks so much for watching the video. If you enjoyed it, subscribe, like the video, and I will see you next time, my friend. Goodbye.